Hello, everybody. Welcome to the start of a brand new week. It's the 5th of September. We are Signal Centre Talking Ball. I'm Joe, joined by Jamie and Steve. Steve, what a background. Look at that.
Oh my goodness. Is it a
Good
green
morning.
screen? It better be a green screen.
Oh, it's a real screen. Oh, look at that.
That's
Steve out
crazy.
in Barcelona for a
No.
couple of days. Hope you're enjoying yourself, Steve. Thanks for joining. Few technical issues. We'll get you on board when we can, Steve. So we'll crack on in the meantime and do the latest headlines. So we've started off the week under a little bit of pressure, looking at the currencies first of all, most of which is being led by the strength in the US dollar. In terms of the headlines over the last 24 hours, let's get, sorry, not 24 hours, last 48 hours of the weekend. We had the US unemployment rate on Friday. That edged higher. The non-farm payrolls increased to 315,000 for August and slightly above consensus forecasts of 300,000 after a revised 526,000 increase in the previous month. According to the household survey, the unemployment rate increased to 3.7% from 3.5%, with a strong increase of over 4,400,000 in the number of employed, offset by a significant increase in the participation rate on the month. In terms of the increase in wages, there was only a moderate increase there. The average hourly earnings increased 0.3% for the month, compared with expectations of 0.4%, and the year-on-year increase held at 5.2%, which is obviously still not keeping pace with inflation. In terms of the Eurozone, the gas fears continue to intensify there. Late on Friday, Gazprom announced that gas supplies through the Nord Stream pipeline would not restart on Saturday due to an oil leak, and there was no timetable issued for resumption of supplies. Markets assumed that the move was in retaliation for the G7 move to cap Russian oil prices, and gas prices surged at the open today. The euro and sterling continue to crumble. Fears surrounding energy prices were an important factor in triggering another dip in confidence within euro and sterling. Euro dollar dipped to a fresh 19-year low, just below 99.00, whereas cable slumped to a fresh 30-month low at 114.50. Markets looking for UK fiscal plans. The new UK Prime Minister will be formally announced today, with very strong expectations that Liz Truss will be declared the winner. Markets will be looking closely at immediate proposals on taxation, spending, and additional support for both households and businesses. And then finally, we've got the Reserve Bank of Australia will announce their latest policy decision on Tuesday. That will be at 5:30 UK time in the morning tomorrow. Consensus forecasts are for a further rate increase to 2.35% from 1.85%. So we can get stuck into some charts now and have a look at how we're set up on various assets. Steve, on the technical side, are you looking good to share some screens, or are you
Yeah, we'll have a little go, Joe. Can you hear
battling
me
Wi-Fi?
okay?
Yeah, you sound great. So
Oh,
yeah,
great.
it's all good.
Just to excuse the seagulls screeching in the background.
I think we
It's
can
all
let you
good.
off.
Okay, let me know if I've only got one screen here on the laptop, but hopefully manage to make it all work. Going to take a look at Bitcoin to start the week off with, as we normally do, and have a look at the weekly, in fact. And we can see we're around this support area, which we broke down to last week. Now, one of the interesting things I picked up on this morning is actually, just get my mouse working properly, is actually the candle we formed on last week's chart. Now, we started off at last week's close, and we moved higher, rejected the move higher, and closed just above last week's close, just around about the 20,000 level. Now that's formed an inverted hammer. That's not so bearish as you may think. So that's quite a bullish candle at the bottom of the trend. So although this is only a 3-week trend, there is potential for a bit of a reversal. We've seen this, we saw this last week. We saw the short-term charts giving some hope to the bull longs out there, and there's a lot of bull longs out there. There's not too many bull shorts out there. So what do we see on the let me just get rid of the ATR on that daily chart. On the daily chart, we can see price action has been contained over that last week. The resistance we've got is 20,700. So current support, immediate support, is 19,500, and obviously we're looking at the 17,600 level as key below there. So although again it looks like we're setting up another flag, we've got to be a little bit careful about the break back to the upside. A little bit of influence coming in, maybe some dollar weakness or something could spur this, or some news from Ripple or something like that could lend a hand to Bitcoin, as Bitcoin supported the alternative coins so much in the past. So that's the levels to watch in Bitcoin. Take a look at gold. The daily chart, we can see from last Thursday, we bounced off the support area. We've got a lovely follow through candle on Friday, bullish engulfing candle from the previous day's price action. We are in this bearish channel. However, looking back, we can see how important this level of support is, and it seems to have held at least for a temporary basis. So maybe we'll get some further follow through upside. Again, Joe will show us what the dollar's doing, but based on these charts, I can see there's potentially that maybe there's a little bit of dollar weakness has crept in, which has lent support to the currencies that are priced, or the assets that are priced in dollar. So on the 4-hour chart, we saw a nice little almost a bullish hammer candle. The body's quite big, so you could sort of negate that, but it's the same sort of price action. And this is a little bit of a bullish flag formation forming on gold. So even something maybe to think about for the gun to head trade idea. Something like that, bullish flag, and we'd get a if we do break to the upside there, we'll get some sort of measured move target out of this, which would have a measured move of back to 1738. We're trading 1710 at the moment, so that's a nice little trade idea already. Looking at silver, same sort of price action. We've been positive over the last couple of days in silver, and this has given us a resistance level, a short-term resistance level at 1829. But further resistance wouldn't be seen really till 1885, 1890. And obviously looking at a break below 1757 would be negative. Now, obviously, this has broken down past the major support level that which was 1815 in silver. So this is a little bit weaker than our gold counterpart. Copper, looking at this, looks like a really nice topping formation. We've had this impulsive move to the downside also, and signs of a bit of a correction in the same way gold is showing. Bullish hammer, which is a bit more classic, and a nice little Marazubo, whatever Jamie calls it. I call it a Marabuzo, but this nice little candle here, which has offered support from this 4-hour candle as well. So it's the support in a Marabuzo would be 50% of the move from the low to the high. So that's what a Marabuzo candle is. It opens at the low. There's a very, very tiny tail and moves to the high. So a very, very strong bullish candle over those last 4 hours till 6 o'clock. Little bit of indecision creeping in now, but again, looks slightly positive for the rest of the day. Taking a look at crude oil, jumping back to, let's have a look at the weekly chart, because we are at this support level, which we've seen 1, 2, 3, 4, 5. This is the 6th week where we're testing this support level around about the, well, anywhere between 85.50 and 86, well, $87. So a nice little band of support here, and we've got basically potential again for on the front foot this morning, looking to move higher maybe just at the start of the week. The daily chart, again, we see this inverted hammer type formation, and also I did draw this potential inverse head and shoulders on crude oil, and it seems to be sort of playing out quite nicely at the moment. Very, very early days for this. Looking at resistance at 89.35 in WTI crude oil, and we really need to get a break above the 99.10. So a long way to go before we see this formation really play out. But the right shoulder looks to have stalled at the ideal level, very, very sort of similar to levels which produce the left shoulder, and we've got the head in between. So that's looking good as well. And natural gas, take a look at this. We've still banding about this resistance, which we've played with for 2 or 3 weeks now. We saw Friday's sell-off, which broke through support at 885, got down to 867. Support below here would probably be around about 840, but the major support down at 755. And obviously, we've still got to think about the natural gas levels that we saw going back a number of years now. And the measure move target, obviously, don't forget the measure move target from this double top here, double bottom here, up to 668. That was the neckline. That gave us a measure move target of 1156. So that's definitely potential for further upside in natural gas, especially with what's going on with Russia, Ukraine, and everything else with the supply restrictions globally. That's about it from my side.
Nicely done, Steve, on one screen. Expertly handled. Thank you very much. Okay, let's move on to FX then. So we can start off with the dollar index, as we usually do. And yeah, new highs there today, really on the front foot, which is surprising based on what you showed me on the gold chart, Steve, as that was showing a bit of strength this morning. But there is no let up on the dollar index. We're making new highs there, and we've rallied straight into this 78.6% fib level on the daily chart. A little bit of resistance being found so far, as you can see, just a tiny little wick on that candle, but all in all, still looking pretty positive, up by 0.45% as things stand. So this is going to be driven by whatever's happening in the global macro environment at the minute. It is a US holiday today, so we are expecting a little bit, things to be a bit quieter. Potentially. Not really the case at the minute, because we can see there's quite some chunky moves on the FX side of things already, as you can see here on the right hand side from the watch list. But certainly no let up in the dollar index. Looks like we're going to see higher prices. Prices continue to be supported very well, but we do have some resistance here at 110.25. If we can overcome that, then the next level above is at 111.31. And you wouldn't back against it at the moment. And if we go to the weekly chart just to see when that level was last relevant, let's go all the way back to the left hand side. We can see there was a swing low which acted as a reasonable support level, and that goes all the way back to September 2001. So pretty historic stuff going on at the moment with regards to the US dollar. On the flip side of this, and obviously the impact that the US dollar has is felt across many currencies, most notably at the moment, euro versus the US dollar. Still trading in a very persistent downtrend. We did see some support form around here at 99.00. Seemed to be some buying support step in, but we've taken that out now. We made new lows today on the euro versus US dollar. We're so far holding on to these swing lows that we posted on the 23rd of August. We did see a gap lower today, and this was actually seen in a number of currencies. There are a number of gaps on the intraday charts, which can provide decent opportunities for those that look at charts on a technical basis. Often gaps are filled, and they can create opportunities to sell into those gaps in expectation of a continued move in line with where the gap was. So there was a gap to the downside today. We'd be looking for this to be filled and then potentially looking for lower prices. I'll show some other examples of this in a moment, just to make that a little bit clearer. Looking at cable, another gap here on the intraday charts. To start off with the intraday, as I'm already there. A gap was created from the close on Friday night to the open on Sunday night, and prices have continued to move to the downside, bottoming out so far at 114.44. Let's take a look at this on the daily chart. We can see that it's been a pretty horrible move to the downside in cable following the close at new lows that we posted on the 26th of August. prices have continued to move to the downside, resulting in this gap open overnight. This red line of support that we have here is at 114.05. And that was actually the low that was posted at the height of the pandemic. So we did see a pretty extraordinary bounce in the months after reaching that low. But obviously, we've seen prices roll over to the downside again. No real signs of any sort of meaningful correction has taken shape here, and we look set to challenge this level imminently. If we break below that, Steve, I'm just going to put you on mute because it sounds like, yeah, thanks, mate. Yeah, below that, where are we going with this? Let's go to the weekly chart. So really, there's not much to prevent this sliding down to these lows that we hit last in 1985. What a good year that was. Obviously not a good year for cable, but in terms of yeah, bringing me into the world, it was pretty good, I guess. Yeah, so not looking great there for cable. Pretty scary stuff, to be totally honest. So let's take a look at some other currencies versus the US dollar. New Zealand dollar, let's have a look at that first. That's trading at key support at the minute at 0.6060. Found some support there. We did have a little bit of a look below it on Friday, but it seems to be holding for now. If that gives way, then we're looking for a move down to this 78.6% fib level. Let's take a look at Aussie, see if that's a similar situation. We're actually holding up quite nicely above those lows that we posted back in July. We've got 50% fib level pretty close by here, and then we'd be looking for a move down to that 66.80 level. If we take a look at dollar yen, that's up by 0.25% or so, making new highs. Still a lot of weakness in the Japanese yen and showing no signs of slowing. There was a little bit of a doji candle posted last Friday, but we're back on the front foot again there, closing on the 141 level for US dollar Japanese yen. And again, we have heard potential for some sort of intervention at some point, because the Japanese central bank will probably feel a little bit uneasy about this and want to maybe do something to strengthen their currency. So we do remain, wary of that on the Japanese yen versus US dollar versus Japanese yen. Just coming back to some of these charts that have gapped to the downside today. So Aussie CAD was one of them that I looked at. If we look at the intraday charts here, just get rid of these drawings. We can see that there was a gap lower here. So this was the last candle that was posted on Friday. This was the open that we posted yesterday evening, and we have moved to close that gap. But so far that has acted as a bit of a resistance. And over the last hour, we've posted an engulfing candle. So potentially an opportunity there to sell based on that gap fill and a decent reaction that we've seen to the downside. So maybe we could be looking for a continuation lower there to maybe retest those lows that we posted overnight. And if you're looking for sort of 2-to-1 risk reward, we'd be looking for a new low to be posted there on that. So that's just kind of an indication of how you could potentially play some of these gaps. And there are a few of them around. Another one there, which has rallied into fill the gap. Yeah, I mean, they're pretty much everywhere. So that may be a standout trade for anybody looking at charts on a technical basis this morning. Okay, let's move on to the indices then. Let's start off with the ASX 200. Just get back to the daily charts just to give us a bit of a clearer picture there. So prices have moved to the downside. We have, we're on the front foot as things stand up by 0.72%. This looks to be the strongest performing index out there at the minute. Actually, the US small caps look pretty good as well in the futures. So engulfing at the moment the losses that we made on Friday. We'll have to wait and see if it's got the enough impetus to continue moving higher in the short term. But taking into account the dominant trend, we are still looking at a sequence of lower highs on that. Looking at the DAX, that is pretty flat as things stand at the minute, underperforming many of the other major indices as it stands. So we broke down through support last week at 13,022. Sort of trying to bounce a little bit this morning. Found some support at that kilo that we posted on the 1st of September. Doesn't particularly fill me with much hope, if I'm honest, given the strength of the move to the downside. The next level to watch is this blue line here, which is 12,000 431. As we can see, we've had a number of touch points at this level over the last few months, going back to March. If that gives way, we'll be looking for a move down to this 50% fib level, which is at 12,130. Looking at NASDAQ, potential for an inverse head and shoulders to form here. Still needs to do an awful lot before we can get excited about that. But the price has fallen into a 61.8% fib level. That's at 12,060-ish. If we manage to hold in and around here, then there is some potential for a bounce. Obviously, the US markets are largely shut today because it's US Labor Day, so there could be quite muted price action on this. A break below the low that we posted on the 1st of September is likely to lead to further losses down to this 78.6% fib level at 11,611. S&P 500, that closed below support on Friday at 39.46. We've got a short-term uptrend line which is offering some support at the moment. Again, the level to watch now would be the low that we posted on the 1st of September at 39.02. If that breaks, it's likely to also take out this short-term uptrend line and then maybe trigger further losses down towards this 38.2% fib level at 38.11. Let's finally take a look at the FTSE 100. That slipped pretty nicely to the downside over the last couple of weeks. Really large, impulsive red candles have formed. We've got a 61.8% fib level at 7,200, which appears to be offering some sort of support at the moment in the short term. We did see a close below it, but then we fought back to close back above it. So it'll be interesting to see if the bulls have the appetite to push this higher today, given the macro backdrop that we've got at the minute, obviously with what's going on with the gas prices and obviously a new prime minister being installed today in the UK. So it'll be interesting to see how this plays out over the coming days. That's it from me. Jamie, hand it over to you and you can take a look through some stocks for us.
Yeah, thanks, Joe. Just bring it up on the screen here. So we'll start off as usual with our biggest gainer and loser of the day. Our biggest gainer of Friday's session was this HOLI or Holly. Oh, I don't know what that says. That's not a word. HOLI is fine, up 16.51%. Had a pretty nice consolidatory move sideways, and we really gapped up on Friday with some big volume. Let's have a quick look at why this has happened. Climb more than 16% following company founder and CEO Wang Changli is leading a consortium seeking to buy the industrial electronics company and take it private through a deal, valuing it at around 1.8 billion. So a nice move up there. If we now look at the biggest loser of the day, and this only traded twice, but it's pretty rough. So this IPO'd on the 1st of September. It started off at 103.99. That was its IPO price, trading 2 days later at 14.90. So a pretty rough decline there, down 71.56% on Friday. Yeah, not much to be said there. Just a pretty, only 2 bars. It's quite a sad looking chart, really. What's even sadder is if we take a look at the stock S&P 500 heat map for Friday's session, you can see it's a fair bit of red, but what I wanted to check out really was the weekly performance, and that's just a sea of red. Everything really struggling. There's no kind of part of it that's done well. I'm trying to look if there's any green. Oh, there's some green down here. CAH up 2.75% for the week, so good for them. But yeah, pretty rough all round, and I wanted to check out some of the weekly charts on some of the big names today. We'll start off with Tesla though, because we've had a request to have a look at it. So let's look at that from a weekly perspective. And as you can see, pretty negative price action. We had a nice little run up after the sell-off we saw throughout April, but that seems to have found its end. Let me zoom out a little bit. We'll put this fib that we've seen for a fair bit on the chart. So it kind of ran into that 61.8 fib, didn't quite get there, but posted a series of bearish looking candles, or certainly this one here suggested there could be a bit of a sell-off, and we saw that last week, gapping down and closing near the low of the week. Break that down to a daily chart. We noted the break of this previous support, potential for a double top here as well, targeting this blue support level down here. We actually put out an idea for this, hoping for a bit of a retest of this level and an overshoot. We did get that retest. We don't think we quite got filled, which is a bit of a shame, but Friday posted this very bearish looking candle here. And yeah, I think there'll be a further move lower this week. It's looking pretty set to at least move down and fill this gap from the 20th to the 21st of July. Yeah, so that's my thoughts on Tesla going into this week. Obviously, US Labor Day today, so won't see too much movement there. Apple weekly chart, still same kind of thing. We had that really nice run up on Apple. We kind of noted how it was plodding along somehow. Had this doji style candle at resistance here, and then a pretty aggressive sell-off 2 weeks in a row, closing at the low of the week each time. So another one we put an idea out for, having a little bit of a buy at this support and the 50% fib, but again looking pretty bearish. We've got the volume starting to pick up a bit now, so that was the highest volume we saw last week for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, the last 10 weeks, and the one prior to that was again a red week. So yeah, potentially some more selling inbound for Apple. AMD, similar. We're seeing a lot of these candles for last week closing near the low of the week, hitting this 78.6 fib here for AMD. What else should we take a look at? Let's have a look at Coinbase. We haven't seen this for a while actually. We had that big spike up, and since then sold back off, not really as aggressively as some of the other stocks. We've actually got a bit of a doji candle for last week's trading. But certainly when you look at this from a weekly perspective, it does look very bearish. Expecting a move lower back towards this blue level of support we have here at $46. Let's have a look at GME. Again, we've taken out this support here now, so that really can go as far as I'm concerned. 61.8 fib's gone as well. Next we've got the 78.6 fib and these previous wicks down here, which should provide some support. Earnings coming out for that on Wednesday. I think that's Wednesday, isn't it? Yeah. So we'll keep a close eye on that over the next few days and see how that reacts to earnings. Google, again, we had a bit of a false break here on Google. It looked like we got above this previous resistance here on this week's candle. You can see we have very low volume, and it was a bit of a fake out, selling off again quite aggressively, heading back towards this green level of support here. If we look at that on a daily chart, you can see that this level of support has been really important over the last few months, and it'll be important again if we get a break through that. Then let's see where we could be heading next. Here we go. We've got a bit of a cluster of price action here, so I think that would probably be the next level I expect to see a bit of support. If we try and take some fibs from this entire COVID move, let's see where we end up. That's the top there. There we go. So this would be at the 50% fib, this little band of support we have here. The next band of kind of price consolidation, I guess, is at the 61.8 fib, and then 78.6% is a lot lower. So pretty key level we've got here. It could open up a more aggressive move to the downside. Have a quick look at Lululemon. This, I think, reported earnings on, what was that, Friday? Thursday after close. Gapped up quite nicely on Friday, up 6.7%. But did sell off on the day like most of the other stocks. We'll check out a few more. Novavax is still, it's plodding lower. This, yeah, really been struggling. We've looked at this a few times. Look like we're having a bit of a turnaround at this point, but you can see I always talk about these big kind of red volume days, which probably isn't a technical term, but it's why I keep volume on the screen. I don't use too many indicators, but for me this shows that the distribution is still there, and we are seeing that negative price action to support it too. Lowest prices we've seen this whole leg down now. Actually, we have got this gap open here from May 2020. That's where I expect to be targeting next, around that kind of $25 level. Still a fair way lower, I think, though. There, Nvidia, we didn't get any help on Friday for that. We obviously gapped lower on the news that the US were cutting exports. No relief on Friday's session, closing at the low of the day again, and you can see all these really high volume days are these red bearish days, closing lower than the previous day's close. So yeah, I mean, you could kind of pick out any of these stocks. It's all the kind of the same story at the moment, so nothing too interesting. The one we got, energy, did all right on Friday. You can see the kind of a few of the names we've got there were up, but generally not looking great at all. Obviously with the markets closed today, won't get much action, so we'll check out a few of these EU stocks tomorrow. Manu will probably have spiked up overnight. I wouldn't be surprised, judging by how the result went yesterday. But we'll leave it there on the stocks. Nothing too good to report. I'm sorry, I bring in bad news as usual.
No worries, Jamie. Thank you very much for doing that. So, okay, let's move it on to the Gun to the Head challenge. So this is where the three of us pick trade ideas live on the stream each day. The participants must provide a stop and a target for all the ideas that we come up with. They're all placed at market. They're all published to our TradingView profile if anybody ever wants to check them out. The ideas will expire at 9 p.m. or when the stops or the targets are hit. It is just a bit of fun. It's highly speculative. And we do our best just to try and see if we can work something out between now and 9 o'clock this evening. So if anybody wants to check the ideas out, they're on our profile at signal_center. Of course, you can watch the streams on here as well. And if you want to participate there and let us know what you're looking at the moment, or if you want us to look at any charts for you, please feel free to let us know. So let's take a look at the ideas from last week. So I was selling euro US dollar into a short-term fib level. Looked to be off to a decent start, but sadly it was stopped out. It was non-farm payrolls on Friday, so it was always going to be a challenge given that we expect higher amounts of volatility.
A little bit unlucky there, Joe.
Yeah, direction-wise, really nice. Obviously, we've gapped lower overnight and still looking pretty weak there, but that's unfortunately how the game goes. Probably should have had a bit of a wider stop to account for the additional volatility. Jamie was selling Ripple into a nice resistance level there. You were 1.5 hour on side with that at 9 o'clock on Friday, so well done to you. And Steve, the man with the Midas touch at the minute, you were selling oil. Sadly, that was stopped out. But yeah, you still remain on a very good run overall, so not a problem there.
I was buying
okay.
oil. Did you say sell?
Sorry, you were buying oil, yes,
Yeah.
as you can see there on the screen. Okay, so 3 new ideas coming your way. Steve, do you want to go first? Are you ready?
Yeah, I'm ready. Go first. I've just published it actually. Published it just in case the internet out here just stalled. But really, looking at the crude oil again, I feel there's a good risk reward in looking for setting longs down here until we get a break of this 85 area. So yeah, inverse head and shoulders potential. We've seen just a little bit of an uplift from a potential right shoulder. Obviously, nothing is confirmed until we get a break of that neckline on a daily chart. Good reaction in the 4-hour chart. Nice sort of corrective. So in this sort of corrective move, I'd like to see a bit of an ABC correction. So see something like this. A, B, C. Something like that is a normal type of correction. And that would take me to the 1-hour chart, which we've just had a break of this neckline that I've drawn in, inverse head and shoulders. It's a downward sloping neckline. But yeah, based on what's going on the daily chart and the trading again around about this supportive level, the reaction higher, just trying to go with this contrarian type trade, but backed up by the longer term support levels. So yeah, getting long. I posted it getting long at 88.50 when it was trading there. It's just moved slightly higher. The stop is at 87. Target at 92.25, giving us a 2.5 to 1 risk reward.
Lovely stuff. Best of luck with that. Jamie, you got one ready?
Yep, I'm good to go. I'm actually looking at natural gas today. Obviously, we've had a pretty nice move up. We check out the daily chart. It looks pretty bullish to me. And when we look at this shorter term chart, we've got we're at a pretty key area here. There's previous resistance from over here, previous resistance from here. We broke through, it's now been support once there and again over here. We're at that level now, and while we are getting a bit of a series of lower highs like that, I'm still optimistic. You know, I always look for these risk reward opportunities, as we all do. And to me, you can keep a nice tight stop here, know very quickly if you're right or wrong on the trade. And if you are right, you can make a good percentage more than if you're wrong. So I'm looking to buy natural gas at this support level, which is currently trading at 8.909. There we go. Yeah, like I say, keep the stop nice and tight. So I'm keeping it under this previous day's low, which is at 0.6. Keep it at 6.2, give it a little bit more room. There we go. And target, we're going to target these recent highs over here at 9.98. I like having round numbers, we'll keep it 9.98. So if that does play off today and we do see that move higher, we'll be making 3.71 R there. So looking to get long at natural gas.
Good stuff. Good luck. Okay, I'm looking at New Zealand dollar versus Canadian dollar. So number of gaps around, as I mentioned on the FX chart. So we're going to try and play one of these today and see how it works out. I've highlighted New Zealand dollar versus the Canadian dollar just because the general trend on the longer term charts remains pretty weak, as we can see here if we keep scrolling back. Very much in a downtrend, as we can see here. So I want to try and target opportunities on the weakest looking charts if I'm looking to sell, and this one kind of ticks the box for me. Looking at the intraday chart, we can see there was a pretty severe gap lower from the Friday night close to the Sunday night open, so a lot of white space there. We've seen prices move up to fill that gap now at 80.19. Price is currently trading 80.17, so I'm going to get that on now. Quite a tight stop going at 80.32 with a measured, looking to target a move down to these swing lows here from the 2nd of September. That's down at 79.63. So that gives me 3.67 R as a trade today. I'll get that published up. It's all pretty much written. I might need to just adjust the levels slightly. So that's a 3.67 R now. That's going to be published up right away, and if anybody wants to check them out or follow their progress throughout the trading session, please feel free to do so. There we go. So
Very
three
nice.
trade ideas for anybody who's interested to take a look at today. Just to reiterate, they are highly speculative. We just literally come up with these on the fly in the last few minutes or so, but looking at them from a technical basis, they all seem to make some sense. So looking at the day ahead, we have a few bits and pieces out today at 4:30 UK time. We've got Bank of England man speech, so that could be pivotal, talking about obviously policy for the UK. We've also got the new Prime Minister being installed today as well. It's pretty much assuming that it's going to be Liz Truss. I can't see anything changing that at the minute, so I'm guessing that's all been priced into the markets as things stand. Throughout the session today, we've got OPEC meetings as well, so that could implicate or have an impact on Steve's trade idea today, potentially, with regards to what OPEC are talking about and what their policies are going forward. And then overnight, we've got the Reserve Bank of Australia policy meeting. So that's at 5:30 UK time tomorrow. So, we could be getting an increase in interest rates there to try and tackle inflation. Throughout the rest of the week, we've got the Bank of Canada with their latest policy decision. On the 8th, we've got the ECB. And on the 9th, we've got the Canadian employment report. So a few bits to keep us interested this week. And that is pretty much that, unless anybody's got anything else to add.
No, just got to put some sun cream on, Joe. So
yeah, you go for it, mate.
Bear with me.
Yeah. Okay, let's wrap it up there then, guys. Hope everybody has a great start to the week. We'll be back tomorrow morning. And until then, please trade safe. Goodbye.
Cheers.